The ongoing G20 meeting in South Africa has placed the limelight on Africa, with the continent pushing for several reforms. Among key reforms is the fixing the cost of capital. If attended to, this move is poised to see African countries access affordable financing that could usher in cheaper loans for Africa's poor nations. Well, I spoke to Dr. Daouda Sembene for more on what measures countries can take to solve the debt crisis, plus a peek into their just released report.
I think we are right now here in Cape Town, and as you know, in Cape Town, there are two major conferences that are going on now. The first one is, of course, the G20 meetings of ministers of finance and central bank governor from the G20. And the second one, of course, is also the Finance in Common Summit, which is the annual summit of major multilateral development bank, but also regional development bank. We are talking about hundreds of them. And of course, this is happening in a context quite particular, in the sense that there is a growing list of countries that are facing issues in mobilizing funding for development, for climate actions. And I think it is against that background that we felt that Africa at least needed to come up with some analysis that could help inform the debate about how sub-regional development bank from Africa can also contribute to that efforts to meet the development finance need for African countries, the climate finance need for African countries. So yes, we just issued that report that's trying to find innovative ways for sub-regional development bank to do so. And when we talked about sub-regional development bank, we are talking about all those African-led development banks that are spread across the continent, like for instance, the Trade and Development Bank, which is covering a number of countries from East and Southern Africa, as well as West Africa. We're also talking about institutions like BOAD, which is the West African Development Bank. We're also talking about others like the EADB, the East African Development Bank, and the ECOWAS Investment Bank. So all of those sub-regional development bank are covered by our report, which is trying to see how we can very much support those institutions in mobilizing more funding to help African countries meet their development finance needs.
Well, South Africa has been making the G20 presidency and pushing towards a debt framework. And I just want to know, how important is this for global partners, including G20 countries, and of course, to support African-led initiatives such as this in regards to fixing the debt problem?
Yes, I think this is a critical issue, because when you look at the situation right now in Africa, we see many countries that are facing very tight sort of challenges in terms of how they can mobilize funding, because some of those countries do have either a high risk of debt distress, or even they are already in debt distress. Others are not in debt distress, but they are really facing very acute challenges in mobilizing their liquidity for responding to their needs, the needs of their population. So I think against this background, I think South Africa is trying to see how the global community can sort of continue the effort they have been doing under the G20 to sort of help countries develop, mobilize more funding for development and climate action. And I think it is, again, this background that the type of work that Africa at least did could very much help inform the debate, because so far we have been focusing on major MDBs like the World Bank, African Development Bank, or other regional development banks, but we tend to forget about the fact that there are many other development banks that are of smaller size, of course, but that can also be very critical in really playing their role in really facilitating access to affordable, sustainable, and timely finance from a finance institution. So I think that's against this backdrop, and hopefully this is something that could be picked up as in the conversation, so that the debate about how to help African countries and countries in the global south in general access timely and sustainable and affordable finance does not only confine to how the larger multilateral development bank like the World Bank and others can play a role, but also how those African-led organization can be supported so that they can, of course, get additional funding, but also the role they should do also themselves, they should play themselves also in mobilizing those funding and making them available to their borrowers from the region.
And Daouda, the debt crisis is raising a lot of tensions among African countries. A new report also just released by the UN as well. But I'm looking at how can African countries tap into innovative financing for Africa's development? And of course, opportunities around SRDBs. Where do they fall here?
Yeah, and I think that's where our our research is very much important, because we are looking at the very innovative ways that the sub-regional development bank can find additional resources to fund development in Africa. So, when you look at those banks, they essentially have three ways of finding funding. First of all, it's through their shareholders' capital and contribution. So their members are African, essentially. They need to come up with some initial capital. On top of that, they need also to respond to call for capital increases. That's their first sources of financing. The second source of financing is the type of the interest income, as well as the repayment that they receive from their borrowers. So whenever a country borrow from those banks and they repay their debts, then it allows them to accumulate more funding. The third source of financing has been usually global markets. Some of these banks have access to capital markets, and they tend to issue bonds to raise some funding. What we see is that has not been enough. First of all, of course, you need to make sure that their members, whether they're African members or non-African members, whether they're public entities or private entities, jump in whenever those institutions ask for a capital increase, when they feel like they need more resources to be able to respond to the need of African countries. That's one way. But that should not be the only way. I think what we found in our report and our research is there should be also some innovative sources of financing, as you indicated. And for us, it includes sort of having those multi-donor trust fund. It also includes having the possibility of raising more innovative financing bonds, like the green bonds, for instance. It also involves maybe getting together among sub-regional development banks to put in place some joint co-investment facilities. And we also felt like intermediary lending also is an innovative manner for these banks to very much boost their firepower and be able to make available more funding for African countries.
And Daouda, just before I let you go, of course, it would be key to discuss the issue facing many African countries in terms of difficulties in accessing cheap capital. And of course, the development banks, how can we make them to be more credit worthy when they are tapping into global instruments?
Yes, I think this is very much critical, because I think what happened is when you talked about some of those institutions that I have been talking about, the sub-regional development bank, they of course have a rating with the global credit rating agencies. And I think their ability to mobilize funding at affordable rate depends on those ratings. And of course, I think it is critical that those ratings are very much remain high, so that they can actually get more funding at lower rates, so that they can, of course, sort of make them available to countries. And I think that's a critical issue. It requires a lot of effort from, first of all, those institutions themselves. It is up to them to make sure that their governance framework, but their also sort of business model is sound enough to give assurances to credit rating agencies that these deserve to have the highest ratings, and that allows them, of course, to tap the capital market and get the best deal.